I think the outlook is fairly positive this year. I think a large majority of that is supported by oil prices. We're seeing oil prices trending towards $80 a barrel at the moment, partly due to tensions in the Middle East, as well as the US refusing to maintain its position in the current sanctions against Iran, which is seen to be supporting oil prices. Also, we're seeing stable production levels at about 1.8 million barrels a day, excluding condensates, which is really supporting the Nigerian economy. In the non-oil sector, it's been slow to recover, but we saw recovery in Q4 2017, and we expect that to continue this year as we're seeing yields in the fixed income space reduce, and we're expecting banks to increase their lending to the non-oil sector, which will support business activities. And that, we believe, is improving business sentiments. As we see from CBN's PMI reading, business sentiment has been improving since April 2017, and it's remained strong to date. So we believe the economy may grow by about 2.5% in 2018. Now, in regards to elections, it could be a negative for our outlook because we tend to see economic reforms fall to the backdrop as election activities pick up. Yes. That includes increase in election spending, which may detract away from capex spending, which is what we really need in an economy to boost economic activities as well as job creation. How intense that is depends on how close the elections go, but we do expect some sort of detraction in the second half of the year, particularly in Q4, as we move towards the elections.
Very good. Now, in addition to what he said, Dipo, how does this affect the equities and, of course, the FX markets as well?
Okay, so for the equities market, this year, start of the year, we had a very positive market. The ASI, which is All-Share Index, grew significantly at the start of the year. But since coming into Q2, markets have slowed down a bit, and that has further been the slowdown has further been enhanced because of interest rates that we see in the U.S. Currently, I think the 10-year U.S. Treasury is over 3%. So going into the election, we feel equities market might be a bit weak, but we still see a positive close for the year. But
despite the bearish runs we've been having locally as well for some time now.
Exactly. So we still feel equities market, but that's just the near term. But in the long term, the equities market, Nigerian equities market, definitely remains a very strong market. Now, if you have a long-term, medium to long-term view, you should invest in. For the FX market, we feel that the FX rate will remain stable, considering the fact that crude oil prices are on the increase. Our external reserve is currently above $47 billion. So those factors we feel will continue to support the exchange rate, and we do not see a material depreciation in the local currency.
All right, so positive outlook as it were. All the same, Ayo, where should investors be looking for investment returns in 2018?
Okay, I think that it will depend on your horizon, first of all. Equities is a long-term play, as I mentioned earlier. If you're a long-term investor, maybe 1 to 2 to maybe 5 years, you should definitely take a look at the equities markets. Over time, it's proven to deliver superior returns. With that being said, you'd have to choose wisely. We advise you look at fundamentally sound stocks, quality names, the likes of GTB, UBA, Access Bank, Danksem, Nestle would be some of our top picks. If you're more of a short-term investor, then probably the fixed income space would be more attractive for you, given that you're guaranteed your principal investment. That's on the government side of things, fixed income securities, your money market instruments. For example, the 1-year Treasury is offering about 13% at the moment, which is quite impressive. It's not as impressive as what we had last year at 22%, but it's still high relatively. So that's the two investment classes we see. As mentioned before, we don't see much of an opportunity in FX markets at the moment, given the outlook is fairly stable.
Basically, those are very useful tips, especially for first-time investors and not experts as well. So now, Dipo, what are mutual funds and how do they actually work?
Okay, so for mutual funds are also called collective investment schemes. And they are funds that are targeted at the retail end of the market. So it's regulated by the Securities and Exchange Commission. And normally, Securities SEC will advise that for retail investors, you invest in mutual funds because the equities market, fixed income market, this requires some level of knowledge. And for you, if you don't have those knowledge, it's better you buy mutual funds that is being managed by a fund manager, and the assets And the way mutual funds are structured, they are quite safe because the asset does not reside with the fund manager. So you have parties to a mutual fund. You have a custodian who are, handles all the assets. You have a trustee who works in trust for the fund holders.
Okay.
And you have the fund manager who manages the fund. So, and it's well regulated.
Right.
For mutual funds, you have to make renditions to the Securities and Exchange Commission weekly. And for retail investors, really, mutual funds is the way to go because at least you are sure that when market starts tanking and a retail investor that doesn't know what's happening in the market, a professional advisor, a professional manager can always read the markets, and take decisions based on those outlooks. So the SEC always advised that for retail investors, it's better to buy mutual funds, which are also called collective investment schemes.
Very good. Now, let's talk about the Nigerian business climate. How well does it serve growth prospects? Is it competitive enough?
I think it is competitive, and I think the administration is trying to make it a bit more easier.
So do you see there's a lot of dynamism in terms of the government policies towards your assessment?
Yeah, I think more can be done. There's been improvements in the ease of doing business, which I think is been the focus of the administration.
Okay.
But with that being said, I mean, Nigeria is currently ranked 164 out of 189 countries in the World Bank's index. So clearly there's more that needs to be done. Some of that is around the infrastructure deficit that we have, particularly in power and transportation. But, for your small and medium-sized companies, access to funding is another thing that needs to be improved.
Okay.
One thing that's been done to enhance that is the development of the establishment of the Development Bank of Nigeria,
All right.
which is there to increase access to funds, but at lower rates compared to what's available at banks. And we believe this should gradually improve the development of SMEs.
Okay.
And it's particularly important for the economy, given that, according to the Minister of Finance, they account for about 50% of GDP. So they could be a real driver of growth over the medium to longer term.
Very good. Now, Deepo, how do you view the drive for financial inclusion by the authorities in Nigeria? We've been seeing a whole lot of this concept in other African countries, but not much word on that in Nigeria. So what do you make of it?
Yeah, I think government is really trying to expand the net financial inclusion. You still have a lot of unbanked people in the country. You have people that, on the investment side, it's not necessarily that until you buy and sell that you invest. You can also invest in the real sector through equities, fixed income, and the like. So there's a lot of enlightenment on financial inclusion, and even for asset managers, as you have the Fund Managers Association, which also tries to enlighten people on financial inclusion. And I think it's maybe not as much as you expect, but to some extent we're gaining traction. And by the time you get more financial inclusion, it also helps reduce that burden on petroleum as a major, because it increases the tax net. When you have people coming to the financial system, you're able to get a better idea of what the tax, the taxation is improved and as a source of revenue for governments. So financial inclusion, I think it's gradual, but I think gradually we're getting there.
We'll get there. Okay, all right, very good. Now, Ayo, let's talk about micro businesses. They're known to be engines of economic growth, but discouraged by poor infrastructure and lack of funding. So how can they create jobs as seen in other economies? So what are the major pitfalls and shortages?
Yeah, I mean, as mentioned before, the access to funding is a major one. There's also support in terms of supporting from management, those within the business environment already. A lot's been done by venture capitalists, but a lot more still needs to be done. I think CBN has a few schemes in place. There's the Development Bank of Nigeria as well. I think the World Bank is trying to support that as well. If you look at other developed economies, small and medium businesses are the main drivers of growth, particularly for job creation as well. Unfortunately, unemployment rate in Nigeria is about 18.8%. Currently, which is very high. We're coming from about 13% levels in 2015-16. So, a speedy development of our small and medium-sized companies would significantly contribute to a reduction in that unemployment rate. Unfortunately, the improvements in infrastructure is a long-term goal. We may not see a significant improvement in the near term, given that power generation, transportation, and those their likes are long-term objectives for the administration.
Okay.
And that's what we're seeing as part of the economic reforms growth plan. Unfortunately, capital expenditure hasn't really reached the targets over the last 3 years. But hopefully, as we exit the elections in 2019, we can see that gradually improve.
All right, very good. Ayodeji Daudu, Head Research Investment One, Oladipo Dauda, Head of Treasury Investment One as well. Gentlemen, many thanks for being here.
Thank you.